So what's changed in 2019 that could actually help you maximize your tax savings?
Well, there are three things to keep in mind. Some of the changes involve alimony. If you got divorced and it was finalized in 2019, the person who is paying the alimony can no longer deduct that expense. So that is a change. Also, the medical expense deduction, the threshold that you need to exceed in order to claim that deduction is 10% of your adjusted gross income. So your unreimbursed medical expenses have to be above 10% of your AGI. Yes, that's higher, and that's going to impact a lot of people. And then the health insurance tax penalty, if you don't have a health insurance, you're no longer going to have to pay a penalty. That has been eliminated.
All right, one of the biggest changes that happened back in 2018 was the doubling of the standard deduction. Is there any change in line for that for 2019?
Well, here's the good news. It actually went up again a little bit, just a couple $100. For single filers, it's now $12,200. And for married filers filing jointly, it's now $24,400. Head of household is over $18,000. Keep in mind that if you are trying to figure out whether or not you should take the standard deduction or itemized, there are a couple things that you may want to do if you're on that line that could increase your itemized deductions. One of the things that you may want to think about is to prepay your mortgage payment for 2020, making sure you pay some of that interest to get the interest right off there. Then you also may want to think about your state, local income taxes and your property taxes, prepaying some of that, keeping in mind, of course, that $10,000 cap there on that. And so if you're going to exceed that, it may not make that much of a difference, but for some people, it may make a significant difference. And here's a great way to think about giving this season and getting a tax break. Increase your charitable contributions.
What if taking the standard deduction actually is your best bet and you don't plan to itemize? Are there moves that you can make now to make sure that you still get some of these tax savings?
Well, one of the main things you want to do is try to reduce your taxable income dollar for dollar. And one of the best ways to do that, if you have access to a 401k plan, is to increase your pre-tax contributions there. Figure out how much you need to contribute to get to that maximum amount. That's $19,000 for the average person. It's $25,000, a $6,000 catch-up contribution if you're 50 or older, and solo 401k participants, if you're self-employed, can give even more money, over $56,000 or $62,000 if you're 50 or older.